Good afternoon, traders. It's Bill Baruch with Blue Line Futures, and this is the FX Rundown. The Fed left interest rates unchanged today. That was expected. Their statement barely budged. The currency market overall was fairly quiet. The dollar index finds itself higher in the session and right around the middle part of the range we've seen over the last week and a half to 2 weeks. The 50-day moving average is rising up, and the market cannot close below 94. So if we could see it close below there in the dollar index, you could see some accelerated selling. On the flip side, that would also have to mean that the euro is looking to close out above 118. That resistance level has become a wall, and it failed again there earlier this week. Now we find the euro back down towards 117. We have key support just below there, and the market is testing that level today as the dollar increased in value. Manufacturing data across the board from the Eurozone into the US was on the weaker side of expectations. So ultimately, it did bring an emphasis on that Fed statement today, but there wasn't much to move the market. So we now look at the euro below our pivot, about 117.25 to 117.40. While it's below there, the bears do have an edge, but they're going to have to achieve that close below 116.70 in order to bring that and retest it to the lows. The yen as well has been quiet. It did nudge a green session, but it's below that 89.90 mark, which we're looking at very closely, and it's as long as it's below there, the bears are in control. Now with the Aussie and the currency and the Canadian dollar, the currency commodity currencies, the commodities in general were in the red. Now this put pressure on both of those. The Aussie again has failed to get out above major three-star resistance at 74.40 to 74.50 area. Now that failure to do that has again pushed the market back around 74 and back in the roughly middle part of its range. We do favor a more bullish Aussie and a more bullish Canadian, but there is just no interest in buying as trade tensions between the US and China remain in the forefront. There is an expected White House announcement coming here today. It's dragged out and we haven't seen any news yet, but they're expected to talk about US and China trade. This could, and we would expect it to move the markets. The U.S. is expected to impose the $16 billion in tariffs. This is all expected. It's not new, but what they could come out with if China retaliates is a $200 billion tariff on Chinese goods. Now, where there was good news yesterday, this dissipated into the overnight, into this morning, where the White House said that instead of imposing a 10% tariff on those $200 billion in goods, they're going to impose a 25% tariff on those $200 billion in goods. Now we got the commodities in the red today, and again, the Canadian and the Aussie are back in the middle part of the range. But all is not lost. The Canadian is very constructive on a technical chart. What we're seeing here is that bull flag breakout earlier in the week, and you're seeing momentum right around the 77 area. We need to see this continue to close above 76.70 in order to maintain that momentum. Give us a call. We're here to talk about anything on the board. 312-278-0500. You can email us info@bluelinefutures.com. You can check our website for updates, and you can sign up for a free trial of our research. But remember, futures trading involves substantial risk of loss. It's not suitable for all investors. Thank you.